So what nobody talks about when it comes to reality of trading is what the trading is truly about. Because when people show you the trading lifestyle, or you see the flashy Lamborghinis, you see the 5 different monitors, you see the trading different instruments, it's all action, it's all fun, it's all exciting. But the reality to making a trading for a living couldn't be further from the truth. Because when you're a beginner trader, you have to have a set of strategy that you follow, you have to have a rules that you follow, that you stick to. You have to know the time frame when the good setups may appear, when the bad setups probably will appear, and you need to follow this to the T. But there are going to be days where the market and trading is going to be extremely boring, and you have to be content with this. This comes with the territory and you sign up for it. You want to be financially free, you want to be your own boss, so you have to take the good with the good, you have to take the bad with the bad. And some days the setup is just not going to be there, or you will miss the setup. And this is exactly what happened to me today. Today I was trading for 4 hours and I didn't take a single setup. I missed 2 trades, and this will happen. You will turn your head and boom, good high probability setup will just pass by you. You will miss it, and you have to be okay with this. You cannot get mad. You cannot start revenge trading. You cannot take the trades. They're not really there. They're just developing, but you want to pay the bills. You want to make the money. If you want to create a consistently rising equity curve, you need to follow and stick to your rules, because the high probability setups are, quite rare. If every trade, every 5 minutes, there will be a high probability setup, we all would be rich. So when you're waiting for the proper setup, you really have to be patient, and you really have to stick to your guns to be consistently profitable. And today I missed the 2 trades and I didn't make any money, and that's okay with me, because not making money is better. Trust me, it's much better than losing money. Not making money is like putting money in the bank. So it's okay to end on a 0 than to end red, because tomorrow is always another day, and there are going to be days where there are going to be a lot of setups and you will just making the money quickly. So this is what we're going to talk about today. I want to show you guys in the second part of the video my live trading today, even though it's not really eventful because I didn't take no trades, but I still want you guys to see how I draw the trend lines, how I look for setups, and I really want you to see how I was just not taking the trades, because that's the foundation of trading. Really being patient, that's the name of the game. That's what it all comes down to. So let's dive into the charts. So when we are looking for high probability setups, what we are basically looking for is a second entry at the key entry point. And the first thing we have to do is we have to analyze the current market structure. And today started with a little bit of a sell-off. We have a break and a new low. You always want to try to draw the shortened trend lines and even the bigger trend lines, because you want to see where the break is and where the new extreme is most likely going to be. And prices created a double bottom and then pushed strongly above the EMA and created a reversal pattern. First entry short, pullback. Second entry short, EMA is holding prices. This is a strong reversal pattern, and prices from that point on rallied off higher, and prices are making higher highs, higher lows. So what you have to do is you have to find a trend line. And when I was trading live, I was looking for a bigger trend line, and I really couldn't make it fit no matter where I put it. And looking back, I unfortunately missed this trend line, which is very nice and fits prices nicely. So this is the nice valid trend line, and this is where you would be looking for high probability setups at the key entry point, either right here or at the EMA. And lo and behold, we have a new high right here. First entry long, pullback. Second entry long. This is a 2-legged move at the key entry point. This would be a good high probability setup. Once again, I missed this trade unfortunately because I was trading the bigger channel and we were quite away from the EMA, so I wasn't really paying too much attention to this setup, but I ended up having the channel wrong, and even that can happen sometimes. So you have a break, attempt to make a new high, and this can sometimes happen too. Sometimes you will just get a double top or double bottom as an attempt by the traders to make a new extreme, and a lot of times that will be enough. So when we have a break and attempt to make a new high, double top, prices started to pushing below EMA. And what you should be looking for is basically the same thing that happened right here, a reversal pattern. So we have a new high right here, first entry long, pullback, second entry long, failure. But the failure triggered 1 tick below a bullish bar, and we're going short, we are selling. So we want to see a trigger below this bearish bar. You cannot enter below this bullish bar. You have to enter below this bearish bar. And unfortunately, we didn't get the trigger. This would be a setup that I was waiting to jump on, but we didn't get the trigger, and you just have to sit on your hands. And prices found support at the EMA. We created a lower high double top right here, and here was the first trade that I missed for today. I was trying to sneak in a little bit further back one tick, and I played it too safe. And I played it too safe because we didn't trigger below this signal bar. The following bar traded up higher, and that's why I was a little bit too leery, because it started to look a little bit congestive like. But once I saw prices are pushing lower, I instantly put it at the close where I normally put it. Unfortunately, I got left behind, and you have a break and a new low from here. But this right here was a good trade below EMA, and you're still waiting for a new low of this trend line, and the market is reversing because we have a break and a new high. Now we have a second entry short off the EMA right here, but what you're watching as is already you have a break and a new low. So I don't think you want to take this second entry short, because you don't know you're going to continue working lower. You have no idea from this point on, so you just have to be patient. Market pushes higher and makes a lower high setup, big nice reversal bearish bar that closed below EMA. Notice the stim at the upper half of the body, upper third, because everybody was buying at the very end of the bar, everybody started selling. So this is exactly what you want to see when you're trying to sell, and there is a resistance forming. So this is where I attempted to short as well, but once I saw this gap, you guys can see there's a gap between the bars. We didn't even trigger one tick further back. We just started at the close and instantly sold off lower. I don't know why was I thinking that, but I just knew I was gonna, get left behind here, because when you have a gap like here and you instantly started selling off, I was hoping for prices to pull back, but that didn't happen. Market just went out without me, and that was already pretty stressful, to be honest, because I missed 2 trades that were according to rules and a good trades. And I've been trading for quite some time. I've been trading for an hour at this point on, and market continued working lower. You have a second entry short right here, but you don't really know that there's a bigger downtrend working. It ended up, what I was looking at initially was something like this, trying to find it off the lows, copy it, put it to the top, and you have a break and a multiple new lows. But as we kept overshooting the market, I don't think this is too valid. It really doesn't matter, because once the market keeps selling off, you really only want to wait for second entries at the key entry point with the trend. A lot of times this big sell-off will continue much lower to the open of the day, which actually I don't have this drawn, but you guys can see the low of the day is important, and it will come into play at some point throughout the day. And we actually have a first entry short, pullback, second entry short off the trend line. So I'm going to mark this setup, even though it's a little bit further away from EMA, but I like how it's a lower high setup, and you trapped everybody going long here and then instantly turn back down. So this is once again a high probability setup, second entry off the key entry point. And you have to, if you don't get into this trade, you just have to watch the market go without you. But from this point on, I was already down with trading and I didn't make any money, and that's okay, because like I said, not making money is better than losing money, and that's part of this game. You just have to be patient. There's no other way around it, and you cannot jump the gun. You cannot get into iffy trades. So that comes with the territory. From that point on, you have a break and a new low. You're finding the support at the very low of the day, approximately, and prices push strongly above the EMA right here. And this is a good indication that prices are starting to reverse, that bulls are jumping into the market. And there are no second entries at the key entry point. You have a first entry long, pullback, second entry long, but you're going along at the very high of this move. You have a break and a new high almost. You're far away from EMA. So you don't want to take a chance going long at this high right here. Once prices make a pullback lower, this will serve to make a trend line, and trend line got confirmed right here. And here would be a good failed second entry short. This is the new low. Prices once again pushed and confirmed we're pushing strongly above the EMA. And you have this big bullish bar, but you're going long. Actually, let me see. This is actually, I thought this is just a first entry, but now that I'm looking at it, there's this doji bar that I missed. Technically, there's a first entry short that failed and a second entry short. So I have to mark this. Like I said, I wasn't trading at this point on, so this part of the chart is already hindsight. But I didn't really caught this. I didn't really notice this because I thought this is just a first entry, but technically this is a first entry short because we triggered below this bar, instantly failed, and a second entry short failure. Big bullish bar off the EMA. So this is a good bar, because I was looking at the failed second entry short somewhere around here, and you definitely don't want to go long at the very high of the move already after you move this far. and prices turn down higher, and you're still inside of this uptrend, so you should be only thinking to go long. You have a new high right here, pull back, first entry long, pull back, second entry long. Your entry would be one tick or at the close of this inside bar, and your stop still would have survived because we want to put your stop loss one tick below the signal bar. This is, you use the price action structure to help you protect the stop, and you will get additional higher low setup that you could add on, even though only advanced traders should add on, but you can add on even on this trade. Higher low setup, still confirmation of the trend line, and it resulted into quick, easy scalp. So remember guys, there are going to be days that are going to be extremely boring, and you just have to follow your rules and trust the process. So I'll see you guys next time. you.